The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good morning, everyone. Basil, Chapman sitting for Tommy O'Brien. Tommy's feeling well. He'll be back soon. And we're looking at the E-mini futures up 28.75 in this rectangle formation, long rectangle formation. Usually these long rectangle formations have to pull back sharply before they break to the upside. But this is a little different because the 5-minute, this is the 1-minute E-mini. Here's the 5-minute E-mini. That 5-minute E-mini has a nice 9-period moving average over the 14. The MACD is improving. The stochastics not yet at 80%. So there's a work in progress. And the 10-minute chart has just been stuck in this range. And we'll see if that's able to spike. You're ready to see 5,036 to say, hey, I think we're breaking to the upside. Until then, we're just kind of stuck. Let's just go through the numbers. You're looking at, I'll go backwards. The bonds are down 830 seconds at 114 and 1230 seconds. To me, this is, you see this arch formation. If we look at something like junk, which is J and K, this is the high yield bond. You can see it's also rolling over. The daily chart is pulled back very sharply under the 200-period moving average. The technicals are still pretty weak. The weekly chart, the 9-period moving average is so close to turning down, crossing negative, but it hasn't yet, so that's a good sign. And the monthly chart has just gone into this H pattern and then a slightly higher H. And this month still has, of course, about a week to go. But we've got, so far, the 9-period moving average in the high-yield bond has gone negative. Let's just see if it's done that in the, yeah, look at that. This is bonds. I mean, look at that 30-year T-bond continuous contract making this H pattern. Now, if it has a higher low than the low that was made, this is a continuous contract. So the number I give you here could change nothing but changes the notation, the pattern, nothing other than the price will change because it gets smoothed out. So that 107 and 730 seconds, that was the low in October of 2023. That's the start of the really big move up in the market. And now what we're looking at is the 9-period moving average is still pink under the black, and that's really a very poor sign. And in the weekly chart, it's the same thing. And in the daily chart, it's really quite ugly, except that you start to see a slight divergence between the slow stochastic on-balance volume running a little bit and the price running. But until you start to see that pink 9-period moving average moving up, this is still not a good sign. And the histogram of the MACD in the daily chart is improving slowly with the price. That's important. So I'm watching this because look what's happened. The XLF, which is the S&P Select Financial Spider Fund, had a sharp pullback from the 42.22 high back in around about the 1st of April. And then what happens is it comes down and it's had two very good sessions to the upside in the daily. The weekly chart, that 9 is still way over the 14, and this double top, I can't believe when I went over the weekend when I was going through all these different double tops, major double tops from the 2021 or 2022 highs down to the October lows and then back again up. It's amazing how many have gone right back within pennies. Like 4170 was the high in the S&P Select Financial Spider Fund back in January of 2022. 4222 was the most recent one, but it's only in a leg B. That just, to me, implies that there should be higher highs to come in the financials. That's really important. And if you look at some of the stocks, for instance, look how nicely these three bars have been in Bank of America, right up to the Chapman wave inside track, the repellent zone. Oh, I shouldn't have said that. Now I have to explain it. I'll go, no problem. I have a technique that I discovered years and years ago, decades ago, and that's where the price comes up very sharply, and then at a peak, D, E, or F, it just, and this happens to be G, it suddenly pulls back, makes lower highs and much lower lows. And that's a pattern that looks like an expanding wedge. It's a declining, expanding wedge. A lot of words. I call it a falling X because you've got your pattern right here. Let me just show you what I'm talking about. If I can get to it, there it is. So basically what we look at is up, 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 starts to stall, lower highs, much lower lows. So that looks like an axe formation, right? Or declining, expanding wedge. But then suddenly there's some support. How that support handles a declining trend line is really important. Why? Because if it takes it out, then every one of the peaks on the left side becomes a target until it gets to the previous high. And then you have to do an analysis. Well, look at this. It's right at the trend line. Now, what I often do is this. Another technique that I developed years and years ago, and I love this technique. It gives you such easy visuals. Look, I call this a Chapman wave inside track repellent line. Why? Look how many times the price has been repelled exactly from that pink line. Well, making it pink right now. And as soon as it starts to break out, it forms either a V-shaped pattern or a cup formation. And now you start looking at the left side high. Well, Bank of America would have 37.77 as the next high. If it's able to close, I wouldn't say just barely, but if it's able to close like 37.23 or something like that today, so far 37.18, up 21 cents pre-market, but that's pre-market. Anything can happen between now and 9:30 or 9:35. So if it does that, then all of a sudden, look, the MACD histogram starting to improve. The on-balance volume is really good. Look at that blue line. Look at the relative strength, that gray line right there. That's improving. Look at the stochastic, gone from under 20% to 29%. So the price is actually even stronger than the technicals. And look at the weekly chart. This is, I didn't do this over the weekend when I showed myself. I can't remember if I did this when I did my overview on Friday. So what would happen now, this is almost like a Chapman wave Roman candle with this long wick. And if at any point this week, Bank of America closes under 35, it doesn't even have to close. If it just trades underneath 35.75, that's 35.75. That says, that's a problem. It's going to go all the way down to this bottom here in the 34s. I don't think so. I think it's acting very well. Look at the way the weekly chart technicals are improving. Look at that 9-period moving average over the 14. So it's very interesting. The reason why I wanted to do this just to show you this particular pattern, because as these patterns unfold, if they in fact do what the technique implies, this is a good sign, because even though bond yields are going up, now let's go to the yields. TNX. I want to do this, kind of go through this whole banking area, the prices involved in this whole economic area of finance in terms of yields, et cetera, because I know that's what Tommy always does. So I thought I'd do it right now. Look, the TNX is trading at 46.37, up 22. This is the 10-year Treasury note. And look, this is the peak. I wasn't expecting to do this. I'll do it right now. Okay. This is a technique that I developed where I identify what could be a cup, but a flat cup, meaning like a bowl formation. And if it does it correctly, if I've correctly identified the plumb line, the price in the middle, it gives you the number of bars to the left, to the right. We're just above that right now. It's really good action. That's kind of positive for the TNX 10-year. I'll be back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
This portion of the morning market kickoff is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foresight Fund Services, LLC.
Hi, folks. So we're looking at the TNX. That's the 10-year Treasury bond. This is the yield itself. No, this is the bond itself going up. This is the yield. Sorry, the yield going up 4.639. Basil Chapman sitting in for Tommy O'Brien. Morning market kickoff show, and we're looking at up 26 cents at 46.41. So that just says that there's kind of the next level of resistance will be this high that was made on the 13th of November of 46.96. We're trading at just under that right now, and I'm not sure if we're going to go to the 49.97 high of the is that the 10th? Yeah, the 10th of that's October the 23rd of 2023. That's just about where the market started its big move to the upside. We'll be watching this closely. Meantime, what I am saying is that those yields, now I need to do this right now. I need to go to the TBT. The TBT is the ultra short limit 20-year Treasury bond ETF. It has pretty much the same pattern. This is a peak E in the daily chart, pulling back just a little bit. It's up today 40 cents, but it had a high in the 38s. Now it's in the 37.40 area. And look at the weekly chart, walking the 9-period moving average quite nicely. It held this beautiful up channel support. And the monthly chart, the 9-period moving average is positive. So we're going to be watching this very closely because, as I said, so the XLF, very, very nice action, 40.38. 40.38 close on Friday, 40.63 right now. What about the KRE? Is that really starting to move? Wow, look at that, 47.32, now 47.56. So we had this, got out of it, had a couple of times, just took some losses. I just wasn't prepared to have the S&P Regional Banking ETF start to fail. And it was really looking very poorly. I mean, it got repelled from all these different levels. And then it finally found support above the 45.67 high of the 7th of February. 4 sessions ago. That was the 16th. Yeah, the 16th. It went down to 45.46. So it made a full arch. And that's another pattern that we look at all the time. I didn't draw this in. I was going to, and then I completely forgot about it. A full arch to the left side, took it out, closed above it, and now it's at the 9-period moving average is improving, but it's still very weak. The MACD is improving, but still very weak. The relative strength, the gray line that I'm pointing to right here, let me just get the pointer, pointing to is starting to move up again, and the stochastic has gone from under almost 10% to 12% right now in the on-balance volume. So this is still a work in progress, because all I can say is that I want the regionals to be moving up in the next 3 months. And I'm about to sneeze, so excuse me. Got that sneeze out the way. I want to see the regional bank, S&P regional bank. I don't want to see them failing, because that's really, thank you. Most importantly, this is the infrastructure of America. These are your regional banks. This is the mom and pop stores. More than that, of course, but it's really important. So it's going to be imperative for the KRE over the next, I'd put it all the way through May. It really mustn't take out 44 support. It's got to try for 48.50 to maybe 49, get into the Chapman inside track repellent zone where it was repelled before. And let's see how it can handle that, at least get there. I don't want to fail. So this is a very important moment, because yields are actually moving higher. And what you want to see is that there's some relationship. Sometimes there's a relationship that when yields go higher, it helps bonds. But we haven't seen that as a persistent thing for the whole year. It's just been a real mix. They're almost independent of one another. So I can't say there's a relationship there. Maybe there is, maybe there isn't. There sometimes is. All I'm saying is those are the prices I would like to see. Really important. Okay, let's go to the IYT. IYT is the transportation index. Look at that turn down. This is from a peak D at 71.16, retested at 71.11, all in March, double top, makes it a peak C1, C2 in the weekly chart, a leg D, could be a peak D on Tuesday. Tuesday is at the end of the month coming up. Yep, Tuesday the 30th, yep. So we've got until Tuesday to push above 70, to get to 72. I don't think it's going to do that. Well, we'll see. So back at the ranch, what we're looking at is the transports in the longer term have gone to a quadruple top. And that top started way back in May. I should have typed that in. May of 2021 at 70.60. I'm just going to put that in here. So that's May 5, no, 60.60, 70.60, 70.60, and that's 5, 2021. And look at this. Look how many times it came right back and tested it. It did it again twice in 2021, later on, pulls back really sharply to the 48 area, 47, 48, and then it runs peak A, peak B, peak C, and Chapman, if you're always looking at those leg Ds, do they make a peak D and then is that a sharp pullback, or does it recycle? Well, this is leg D and probably a peak D. Where? At 71.16. Isn't that amazing? After all that time, 56 cents away from the previous high of May of 2021. I mean, I just love the way charts work. Look at that beautiful symmetry. Number of bars on the left from the top down to the bottom in October of 2022. And the number of bars exactly to the month. Last month went to a slightly higher high. All right. So with that said, what we're looking at for today is I'm anticipating now, wow, this could be totally off. I'm anticipating that the Dow has had a huge correction. It started off its correction earlier than everything else. It started off, that was right there on the 21st of March at 39,889. That's when it started. The others are all later on. So I'm suspecting that the Dow is going to be the first one to attempt to have more than a bounce, to have a kind of a rally but I'm still calling it a rally within a bounce because I think a rally, and then we have to come back and do some retesting. So within that context, look at this peak D in the weekly chart. Now, I don't want to go through the whole thing because I discussed it, that it isn't really a peak D. It's using a Chapman wave phantom peak right there, but the YM, that's the futures, has legitimately made a Chapman wave peak D, so that's the reason why I can use it. We got a lot to see here. The Dow futures up 207. We'll come back in a few minutes, in 4 minutes time, and we will have the market opening. But as I'm suspecting, I could be wrong. I'm anticipating dollar holds well. The Dow rallies more than one would anticipate because of the mix of what it has. The gold is pulling back very sharply. It was down 60, now it's down 61. And the other thing is that yields, I'm watching those yields very closely. I'll be back in a few minutes for the opening. Basil Chapman is sitting for Tommy O'Brien. He will be back, and I'll be back.
Tigers, the inaugural session of Live Trading Fridays with Larry Pesavento was a massive success. Trades were communicated, questions were answered, and money was made. Every second and fourth Friday of the month, from 9 a.m. to noon Eastern Time, Larry wants you to join him as he places live trades and takes your questions. That's right, with this monthly subscription, you receive access to 2 live trading events. We are gearing up for the next session Friday, April 26, so there's still time to sign up. For this month only, use code LarryLive at checkout in order to secure $50 off your monthly subscription price for as long as you subscribe to the service. We'll see you next Friday, April 26, Tigers. TFNN, educating investors.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstad's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstad releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
The stock market is a delicate, interconnecting web of commodities, equities, and trader psychology. When one string of the web is pulled, it has a ripple effect across the broader market. This is where opportunity lies. But how are you to gather all of this information into one cohesive model when you're already spending your energy looking for any possible trade opportunities? Luckily, you don't have to worry about that, as Tom O'Brien has brought all important market news to you in one single newsletter, Market Insights. Market Insights provides a daily overview of what's happening in the indexes, bonds, gold, and more. Follow along with Tom daily as he analyzes the components that affect the overall movement of the stock market, giving insight into how each one plays either a bullish or bearish role. Tom also analyzes specific equities that he believes has the potential to make huge returns, and his track record proves his analysis right. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Don't let the market leave you in the dust.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Good morning, everyone. Basil Chapman. This is at 9:30 in the morning, and this is the opening bell. So if we're looking at this, let's go to the opening bell. We're just looking at the futures of the moment, and I'll go. There we go. So we've got the Dow up 170. This is a nice leg. It needs. I drew in this pattern recently. I said from that 17th of what was it? 17th of. Let me just try to get that little. They are from the 17th of. April, just excuse me, there we go. From the 17th of April, the low that was made saw the histogram from that moment start to improve a little bit in the MACD. The stochastic went right down to the 10% area. It's now 12%. It's a start. It's not a big deal. And the on-balance volume is trying to turn up. The day is young. I'm just anticipating that the Dow is going to do a little bit better than the others. You had the semiconductors get smacked. I'm going to go to it in a moment. I'm just trying to draw this pattern. There you are. So what's very important at this particular point is that within the context of what we're looking at, the Dow has been the strongest over the last couple of days. That's all I'm saying. The Dow has been the strongest, and I'm anticipating that there's a little bit more to go on the upside. Looking at the S&P, let's get the cash S&P right now. The cash S&P is up 22 at 49.89. The futures are up quite a bit more. It's holding pretty well when you think about it. Most importantly, what we're looking at is how does the whole area, let me just get out of that, excuse me, close. How does the left side low that was made right here, this low at on the 21st of February, the low was 5,038. 4,946. That was the next I'm looking at. This is the day of the 21st. So what was the low? 4,946. And the low on Friday, I don't think I updated it. I'll do it right now. It was 4,953. Yep, that was it. I have updated it. So it was slightly higher. And I had a left side, right side price time match. And that said that going to this Chapman inside wedge target support line, there should be some kind of a bounce. But the MACD is still very weak. The histogram is still weak. The stochastic's flat at 5%. On-balance volume is very weak. So this is a work in progress. In other words, the Dow has already had some kind of a turn, which is good. But the others are really working very hard to do that. Look at the QQQ. Trying to rally early this morning. It had a very nice bounce. Now the bounce is a little bit less, but it's still okay. It's up 273 at 417.38. Here, the inside, this inside wedge target support line is way down. But look, the MACD is still declining. The histogram is still declining. The stochastic's flat at 5%. On-balance volume is not very good. But what's really important about this, you've got this left side low of the 31st of January of 416.79 in the QQQ. Well, we went below that. We went to 413.07 on Friday. So it's really important to actually get above this low that was made on the 31st of 416.79, and right now it's at 417.39. That's a start. Now, I have to get back here for a second because I want to check out. I think we're about, yes, we are about to turn to the upside. And if that's the case, then what we want to do is follow the E-mini. Yep, you remember I said the long rectangle. Very often you can see a pullback under it. We've had that. This is now the digestive phase. It's going to take a little bit to see whether or not there's any real traction to the upside because a lot of things are very negative. I mean, look at this. Look at the IWM. Up today quite nicely, up to 27 cents at 193.37. But it's just been steadily coming down. It's right on the 200-period exponential moving average. That's going to be very important to hold. Now, the other thing I'm looking at is, look, the SMH is the semiconductors up $1.22 at 200.45. I've been very negative this since it made the top at 239.14 on the 8th of March. Look at this H pattern, dreaded H pattern. Just took it out and plummeted Wednesday, Thursday, Friday, and today's trying to rally. It's only up $1.06. This is tough stuff. This just says that in the larger context, this is the larger context, the weekly chart has started to deteriorate on a price basis, but the 9-period moving average is still way above the 14. That's a good sign. The MACD is negative. The stochastic's under 80%, it's at 64%. The relative strength is down. So this says to me that even if we have a digestive phase here where you've got some rotation into the strength areas, I just want to check where the XLF right now is. Remember, we discussed this earlier. It did bounce, giving back some of the bounce. It's up 12 cents at 40.50, but at least it's holding okay. That just says to me that it's really important to be monitoring what's working and what's not in the first few days of this week. Why? Because if the semiconductors continue their swoon to the downside after being so spectacular to the upside, let's go to NVIDIA. I don't really want to go through these. I've been talking about it for weeks and weeks and weeks about the round numbers. Remember, NVIDIA had the round number. That was a round number all-time high of 974.00 on the 8th of March. And here it is trading at 777. I mean, that's 200 points lower, right? It was more than that on Friday. And that just says to me, hey, there's a timeout coming for these semiconductors. There was micro devices, micro devices on the 200-period moving average at 148.23. This is a leg G/C to the downside. 227.30 was the high back in March, and here it is at 147. This is just not good action. Now, here's something very important within the context of just rotating through the different sectors. Look, MSTR, MicroStrategy, had a round number, two round numbers on the day it made its 1999.99 all-time high. It had a 1953 open and 1942 low. Here it is at 1223. Look at that weekly chart. What was the other one? ARM. I mean, ARM Holdings had a round number, all-time high of 164.00 on the 12th of February, 164, and it's trading now at 91. It went even lower. It went almost got cut in half. On Friday, it was at the 85 level. I mean, really. So I'm just saying that you've got to be somewhat careful right here. So we did take a position today just as a trade, and I'm not sure that that trade is actually going to work because I'm anticipating that there's some kind of a rotational correction going on right now, and hopefully the stronger sectors will start to move up as the weaker sections continue the digestive phase. But in the meantime, back at the ranch, I did want to go to, I had questions. Here we go. So gold. Gold is down 64 on the 14-period moving average. It hasn't been there. It hasn't touched the 14-period moving average since it broke out. That was right there on the 26th of February. Can you believe that? And 26th of February was at 2,000, around about 2,050. It screams up to, this is a continuous contract, it screams up to 2448.8. This is a continuous contract on the 12th of April. And now it's at 2348, making a 1-to-1 to the downside at a peak D in the weekly chart. I'll be back. Basil Chapman, sitting in for Tommy O'Brien.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Thank you for Duffy for that in the den. We've got today Verizon has earnings report. I don't know if it's already given it, but it's down 7 cents at 40.42. Had a spike up to 41.64, and it's pulling back from that spike. This is really tough. I mean, look at the very nice move from the 30 level, under 30 actually, back in October, all the way to the most recent high in the 43s. And you would think that the cord cutting and everything that's going on, that this is not where you would be. I mean, this is, but it's done very well. Now it's just digesting these gains. So that's today. Tomorrow is Tesla. Let's go to Tesla. Tesla's really acting so poorly. We've been discussing how there's this one-to-one to the downside right here. It's done it so many times. Will it do it again? And that level is down at the, 121 area. Well, all right. That's the one-to-one. It doesn't have to listen. I'm just saying that's the measurement that it keeps doing every time it's had a pullback from throughout 2023. They had these big, you see the blue line, that's the number of points that it gave back. I don't know if it's going to do that, but it really is a problem. I was speaking to someone the other day about Tesla. And, Tesla can come up with all these things. They've got the charging stations. You never know what Tesla's going to come up with. But the price of the stock, as we're looking at it right now, just suggests that the weakness should continue a little while longer. But at the same time, I'm also looking at it and saying that within the points between 121 and the low that was made right here back in January 2023? I'll tell you in a minute. Yeah, January 20, it went to 101.81. Between that 121 and 100, I think there's going to be some kind of support, and it's going to have a pretty decent bounce. I don't know if it even gets to the 121 in this particular phase, but it has been looking pretty ugly. So here, let's go to, so there's Tesla's coming out tomorrow. Visa, let's see where Visa stands. Visa made in leg D, could be a peak D this week in the month if it goes into next Tuesday, below the all-time high. That was made just in the 290s, trading right now 269, peak E in the weekly chart, and a peak D in the daily chart. And I did look to see if there were round numbers, and I didn't. I can't remember now if there were 90. No. It has to be within a couple of points of the high. Okay, so this is still pulling back very sharply. Visa. Let's go to the next thing is IBM. Oh, no, that's Wednesday. Let's go to GM. So GM, electric cars, the way I'm looking at it, I think that there must be a slowdown or something. People are starting to realize that they're not a panacea. They are fabulous to drive, etc. But there are a lot of consequences. You have to find charging stations, and that's very difficult. What's going to happen when you have so many people with electric vehicles and you only have so many charging stations, and it's not like filling up your car that takes 5 minutes, 7 minutes, something like that. They're going to take much longer, and people waiting in line. Can you imagine the traffic out there? It's going to be quite dangerous. So there are a whole bunch of consequences to this, the benefits. And as I see it, that just suggests that we should be looking at, so at least in the shorter term, some kind of a hesitancy and on the part. I think hybrids are really doing much, much better on sales. So that's, anyway, General Motors has pulled back. It needs to hold 41. If 41, if it doesn't hold that, 38 is the 38 is the 200 period exponential moving average support. Now I just need to go here for a second. Is that starting to improve? I think so. So let me just do this. Yeah. So I think, the futures are telling me that we've gone through this early part of the morning of the selling, and now new buyers will come in. Can it hold? Because we'll get to 1020, and 1020 is when we need to see whether or not there's a whole third round of the day that starts. Let's go to GE. GE has just been an unbelievable, it's been a monster really on the upside. Made 158.69 recent high, and then 158.68, 2 cents lower retest, and it's trading right now at 150.04. Did have a round number the other day. Most importantly, what I'm looking at here is that weekly chart has gone to a leg F. There could be an instant restart, so I should put F/B. I'll do that right now to say there could be an alternate count because it's still holding extremely well. And I'm going to see what happens with GE when with the earnings, because this is, look at this unbelievable move from basically December of 2022. It's gone from the under 40 area to 158.69. This is a new GE, and that's why I'm thinking that's what happened with Microsoft. Look, Microsoft was once upon a time a darling back in the 2000s, and then got smacked. And then over the period of time, it's had ups and downs. But the most recent multi-year move, let's just go to Microsoft right now. Look at this. This is something very different. This is from that 349 high back in November of 2021 down to 213 in October. And now it's trading at 401. It's hit 430.82 already. It's in this arch formation, retesting the left side low. And when the earnings come out, we'll see whether or not it's able to hold those earnings, to hold the gains. But it is in this digestive phase, having been a leader, and now it's taking a breather. So we're watching. That's because it comes out. Oh, that's Thursday. So Meta is in between. Meta is on, gosh, let me just see. Meta is 489.51 right now. Made a peak F in the daily chart. 530 was a round number high. After that, 523.57. Yeah, this is very interesting because it's trading at 489. It's had about a couple of weeks of very, very poor action, but after a spectacular move that went from basically the August low in the low 300s, in the 300s itself, low 300s, up to the most recent move in 530, it deserves a breather. So that's really what I'm looking at. And some of these stocks are still leaders. They just need a little time out. That's all after having spectacular moves. Alphabet, that's Google. I always go to Google and go to the GOOGL. Look at that, holding really well. This is one that's just not given in at all. 152.10 was the high back in February of 2022, plummets down to the 80s, comes all the way back, and just a week and a half ago, it trades to the 151 area, 5150, and that's a peak D in the daily. In the weekly chart, there's an F in the daily chart. You can see, I mean, it doesn't have to have a pullback. And you'll see what the earnings does, because at this particular point, it's got huge support in the 152 to 149 area if there is a sudden pullback. So the leadership is kind of a little spotty, but the leadership continues with some of the like Meta and to a certain extent Microsoft, Google, and we'll see if that's going to be able to continue. Intel, INTC, so what's a 5 billion or something is going to Intel. Gina Raimondi was talking about that. Let me go to INTC. INTC, there we are. Yeah, down sharply. It doesn't seem to have helped Intel at all. I guess whatever they're doing in the chip sector hasn't been the way to go. But hey, the week is young. We'll see what happens when the earnings come out. I'll be right back. Basil Chapman sitting in for Tommy O'Brien. Dow's up 50, S&P's up 25.
The Gold Report. As a precious metal, gold is still king. It continues to hold the most effective safe haven and hedging properties across the global major trading hubs of the London OTC market, the U.S. futures market, and the Shanghai Gold Exchange. The Gold Report. Tom O'Brien publishes his weekly gold report every Monday morning for subscribers, consisting of coverage of the XAU, HUI, GDX, the dollar, bonds, the South African rand, as well as 25 different mining equities with specific buy-sell recommendations. The Gold Report. New subscribers get a 30-day money-back guarantee so you have nothing to risk. Subscribe to Tom O'Brien's Gold Report newsletter now at TFNN.com.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Hi, folks. So just to wrap up before I do my show, the Tiger Technician, this hour in a few moments, check out my opening call daily newsletter. We've got the Dow up 51. I'm anticipating that there's a little bit of a bounce here, bounce maybe to the 14 period moving average at 38,270 over the next day or two, just at least an attempt to do that, and it'll be kind of rotational. So we're looking at the S&P at this particular point also having a little bit of a bounce. But look at that, up 24 at 49.92, but stuck in the middle of this very ugly candle from Friday. So this is a moment where you've got to be very selective. And if you are looking at the long side, at least for some things, I'm treating them just as trading positions. So in fact, for one part, we've got a short and a long in the same thing. But they're different numbers. One's aggressively in one area and others just 1-to-1. So we're watching that very closely. Now, most importantly, what we want to see is bonds. Let's go to the TLT. The TLT is down again, down 38 cents at 88.78. So I think that the yields are really much more an issue than almost anything else. If the yields continue higher, it really puts a pressure. You can look at this Toll Brothers. up 37 cents. It's had a really strong move to the downside from the 130 area down to 112. It finally is participating to the downside with the others in the home builders, because those yields, and I spoke to some people over the last couple of days who in the real estate area, and they just say that those yields are having an impact, and you can't expect them not to. So that is important. So we're looking at a market that has to be very selective. When you're looking at the upside, I would say stay with what's worked thus far, because that seems to be the picture. So with that said, we're about to wrap this segment up. This is the morning market kickoff, Tommy O'Brien's show. He'll be back soon. And what we are looking at is how does the day unfold, and then how do we get to Wednesday? And I just listed a number of stocks that have earnings reports, and some of them will be pretty important. I think GM and GE are going to be big tells on a bunch of areas of the market. So within that context, I'm going to say stay tuned. Coming back for the Tiger Technicians Hour, and we'll have a little bit more. We'll see what happens after 10:20 this morning. That's when I think the next phase of the market action appears. And